To have on stage a company that is at least 125 years old, a group, a conglomerate, 10 listed companies at last count. And Mr. Subbiah here is someone who does not necessarily chase headlines, because headlines constantly chase this group. Thank you very much for being here with us today. There is so much to unpack, but I want to focus on the big theme which is part of this event today, which is value creation. For a conglomerate, for a group with such a storied history, how do you ensure value creation for your shareholders? There are generations who've been managing this. You are now at the helm. What's the core philosophy behind value creation as a business?
So I really think that the core comes from an incessant focus on growth, right? Because as long as companies are growing, as long as organizations are growing, I think value and other things follow. Obviously, you got to pick the right sectors to be in, but I think the core of it is always growth, right? How are you constantly thinking of growing? And the only way to grow is to constantly adapt to the environment, right? Because 75 years ago, if the bicycle was the right thing to make, you've got to think of what's the right thing to make at this point in time. And as long as you're constantly thinking of that, then you usually you're ensuring you're creating value for your shareholders.
What does the present crisis mean for your group? I'm not talking about immediate impact of disruptions, but in terms of learnings to adapt, because you spoke about adaptability being core. What does this present energy supply and price shock tell you and your group?
So I think it affects different industries in different ways. Clearly, I think Arun obviously talks about the impact on the fertilizer business, which is very different. But when we think of other business in the chain, they might not be as directly affected. But I also really feel that every crisis offers a lot of opportunities, right? Because right now, everybody is beginning to rethink how they globalize. I mean, where the risk around their supply chains has become a very, very key area of focus now. And so everybody is beginning to think of, how they diversify. And so interestingly, even in our semiconductor business, where we are building out an OSAT, there was not, so we had to go out and really sell it because, it's the first time India is doing something in the space. But what's interesting now is that we're seeing a lot of people approach us because they want to diversify. People actually worried about, having, previously it was China plus one, but now everybody's worried about where you're sourcing, whatever you're sourcing from. So I think in every industry, we're beginning to see this play out more and more. And I think that offers us a lot of opportunity as a country.
Does the helium shortage that seems to be building up impact your semiconductor operations, or is your part of the business separate from that? The foundry part?
So right now, we're basically only going to start manufacturing next year. So right now, by the time, if we haven't solved the helium shortage by then, I think that we'll have other problems in the world.
Absolutely. Anisha spoke about just in case versus just in time. What would you add to just in case as operating philosophy?
I don't know if just in case is necessarily just as an operating philosophy. I mean, to me, operations are very different, right? Operations is just basically ensuring that whatever your the strategic direction you set, you achieve. So for us, so I don't know. I mean, I'm not sure I can have a good answer to what I would add to just in case.
The context really was how global supply chains are being reshaped. The way we were doing trade, and groups as large as yours are linked with global supply chains. There's no escaping that. And that seems to be fragmenting. Trade policies, tariffs have changed. The context for that question was that.
So I think the broad thing that I'd agree with is that actually it makes no sense anymore to tie yourself to one alignment, right? So basically, previously it was, are we tied up with the US? Are we aligned with Japan? Are we tied? So I actually feel like now that will not hold anymore. You actually have to be open to many different alignments and have to learn how to work with those alignments as potential sources and as potential customers for everything you do.
You're a fourth generation leader. How do you blend the entrepreneurial wisdom of the forebears who really started it and marry it with current modern management practices and the imperatives of doing business in the age of AI?
So, so in most family businesses, there's a fairly classical view, right? When the founder starts it, they start with a particular mindset. It's called the founder's mindset, and they shape the business in that particular way. The second generation is usually growing it from there, and usually by the third generation, some amount of wealth preservation begins to set in, right? Versus wealth creation. But I actually think that offers the fourth generation a lot more opportunity, because you can go back and start thinking like founders, right? And that means, looking at everything de novo, starting to take risks that previously people might not have taken, because the base is there. The base is very solid, and that allows us to think in saying that if the solid base is there, then we can afford to take a lot more risk than we were taking before. So once you establish that, then a lot of it is beginning to think of where are the new horizons going to be, right? I think the good thing with family businesses is most of them tend to take a very long horizon in their thinking. So we think of 25 years as short term, right?
25 years is short term. I just want the audience to register this.
Yeah. And so when we start looking at businesses, we're really saying what's going to be around for the next 50 years, for the next 75 years, and start picking and identifying sectors like that. And then saying, okay, now's the time to get in, now's the time to establish a beachhead in those sectors. And when the beachhead actually kind of develops into kind of being a full-blown business, could take 10 years, could take 15 years, but you just got to stay the course and be patient.
Mr. Subbiah, since you said 25 years, has AI, the advent of what we are seeing now, shortened or changed that time frame?
So I think, AI has got this whole, nobody knows most things, right? So it's bad to try to be the expert on something that we understand very little about. So I try to dodge any AI questions, because honestly, it's definitely going to have a lot of impact. There's no doubt about it. So you've got to embrace it. But what impact it's going to have, it's a classic line, right? Which is a lot of these things, you're going to basically underthink the impact in the short term, but it's definitely going to have a lot more impact in the long term.
What's the AI app that you use on your phone?
So I tend to use a combination of Claude and ChatGPT. I actually think it's like a bit dangerous going all with one, because then they know everything about you.
Okay, that's a good point. Coming back to fourth generation, and I want to ask you, how do you take business decisions between data on a spreadsheet and intuition? How do you take a decision? Is it a mix? What is the ratio?
So actually, I saw that next you have Swami Gaur Gopal coming and talking, right? So I'll give a slightly an interesting twist to that answer. So in yoga, there's this concept of the human feminine and the human masculine, the Ida and the Pingala, and both are there in all of us, right? The human masculine is usually kind of how like when I think of, McKinsey and analytical training, a lot of it is about data, rigor, that's how you make decisions, right? So that's the one side, your spreadsheet side. The human feminine is a lot more around intuition, right? And one thing that's usually well established in yoga is that this intuition is a far, far more advanced form of intelligence than data and spreadsheets. And the interesting thing is that actually what you're trying to achieve is a good balance between the two. So I actually think that thinking that it's one or the other is a bit Western. But in the East, we understand that it's a marriage of the two. It's a balance. And actually that balance is what creates the best answers.
A round of applause for that fantastic answer. Mr. Subbiah, I want to also dwell on one of the key points that we are seeing, and this is new business forays. coming back to semiconductors, conservative group. I don't mean that negatively, sir, but you're conservative. You won't just make an announcement for driving up your share price or influencing headlines. That's not how you work. What prompted you to go there? Obviously, it can't just be some production-linked incentive also. What drove that decision?
So you really, like I earlier articulated, it's that the biggest thing is that I think that there's an opportunity to look at industries that need to get built in India for the next 50 years. Right? And if you look at India in that perspective, there are a lot of white spaces that are not filled. Right? Semiconductors is definitely one of them. Right? It is a real imperative national need. But it's also something that India is very well suited to, right? 20% of the world's semiconductor engineers are Indian, right? So it's actually a travesty that we've not had fabs, we've not had packaging facilities in India yet. But when you look at the global balance, you've seen a massive shift away from the Western world, which is where the original fab started. And the original packaging facilities started. A lot of them have started moving east. Now, if you look at the future, a lot of these sectors in manufacturing are going to be dominated by the east. Right? A lot of manufacturing is going to move away from the west and move to the east. A sector like semiconductors is almost natural, because if you start looking at what's going to start playing out here, is it's going to be more of a marriage between fabulous design of semiconductors, a lot of which happens in the East now and a lot of which happens in India. And then that getting married with production technologies, including in the fabs and in packaging. So we already have a lot on the fabulous design side. So it's really about, so it's almost a natural corollary to then marry that with the packaging and fabs. I mean, so packaging is what we're doing, and Tata is doing a fab, and Tata is doing both. But we're doing a packaging facility.
We wish you all the very well for that, because India's first initiative in the semiconductor space started in the mid-70s in the public sector, didn't take off. Great national loss. Had it been there, it would have been fantastic. I want to turn to another part of your business, because you're such a big group, and ask you about the finance business from the point of view of credit cycles. The Indian economy has been very resilient, in fact, in a Goldilocks phase. The last 1 month has been an external shock. We hope it ends soon. But overall, our fundamentals are very, very strong. What are your thoughts about the credit cycle, consumer offtake, and lending rates in the new financial year going ahead?
So one thing is that I'm not very good at prediction. I'm always worried about people that are, because most chance you have a coin flip chance of being correct. But I think the good thing with India has been that if you look at history, and the thing is that most companies have most financial services companies have been able to manage in a fairly tight band, right? So if you take us, we've been between 3 and 4% pre-tax ROA over the last, I'd say, 12 to 14 years. So when you talk about the effect of a credit cycle, you're talking about a 1% total movement in pre-tax ROA. And actually, I would say that that's not that bad, right? So just the fact that India has been able to hold, and most of the well-run companies have been able to manage in that fairly tight band over long periods of time, right? I'm talking about over 20 years, is actually very, very, it really points to the strengths that India has, right? So I don't think we've seen any shocking, events. Even when we saw 2005, 2008, that crisis, the impact on India has been highly mitigated, and I think that comes from a combination of good, governance at the center, and very good, monetary policy and controls by RBI and the others, and they've just been, I think, great in terms of how they've managed things over cycles.
Mr. Subbiah, since you're one of the best CEOs this evening, I want to ask you 2 questions in the time that we have left for our panel. One is, how do you avoid risk? what is it that one thing or many things that you stay away from, regardless of how lucrative it may seem to you as an opportunity?
So first, I don't think it is possible at all to avoid risk, right? If somebody's found a formula to that, I'd love to learn. I think business is fundamentally, it involves risk, right? If you're in financial services, it definitely involves risk, right? So I don't think it's about avoiding risk. It's just about managing risk, right? And I think that in the end, you just got to ensure that whatever you're producing as outcomes kind of, mitigates the amount of risk you take, right? And I think that that's all good business people do, right? But I don't think it's ever possible to avoid risk.
But would you plumb for growth in this context?
100%. I think at any point in time, you need to be, I think businesses that are really successful over long periods of time are always focused on growth, right? Growth is like oxygen, right? I mean, without growth, businesses stagnate, businesses die, right? And it's the same, at a personal level as well, right? I mean, without growth, we stagnate, right? and we die. So I think the only way to look at businesses is that, right? Kind of being very, very focused on growth. Now, obviously, if you get carried away and growth is the only metric, things can go very wrong, right? So that's why, one of the things that I say, kind of, we are Chettiars, right? So as a community, we're very focused on cash. So so one of the things we have is an obsession with free cash generation, right? And I think that if you have growth without free cash generation, you could get into trouble, and you will get into trouble, especially for manufacturing. Obviously, financial services is different, but growth without free cash generation is a recipe for disaster. So we obsess on it, right? So everything, if it's not in the hundi at the end of the month, it doesn't count, right? And so that's the way we look at it.
Great answer. And one final bit. We have L&T here, not just India, but one of the largest conglomerates of its kind in the world. So I want to end this session by asking you about the future of the diversified conglomerate. You have a storied history. There are so many more, but the way business is changing, not just in India, but globally, are diversified conglomerates going to stay 10, 15, 20 years down the line?
So there's no single formula, right? I think it's not that certain companies are very, very good at being monoline, right? But I actually think in a place like India, there is always room for diversified conglomerates, right? I mean, Anish spoke before me, and you talked about SNS and a lot of the others as well. The reason for this is that there are tremendous advantages to basically having a certain amount of scale in this country. Right? I mean, when you talk about access to resources, access to talent, right? All of that basically gets attracted to, to what they perceive as safe harbors to go to or good harbors to go to, right? And I think that so basically, if you have that inherent capability to attract that talent, to have access to financial resources, and if you don't use it, then that's not that great a move, right? And obviously, in that process, people pick diversification because one thing it does is it does mitigate risk to a certain extent. But the other thing it does is it also allows, you to grow, because in certain sectors you won't be able to grow more than a certain percentage of the market, right? But having the diversification then allows you to scale. And I think India offers that opportunity for scale, right? Honestly, Warren Buffett used to talk about winning the gene pool lottery, right? He said being born, kind of in America straight after the Depression gave him, I don't know how long he's going to live, and I wish him a long life, but how many ever years of unfettered growth in the US. In a lot of ways, I think we won that same gene pool lottery in India. And I think if we don't use it, it's ours. It's ours to lose, right? And so why not? Why not kind of leverage it where we can?
Absolutely. And one final point, how much of yoga do you do every day?
So I probably do about 3 hours a day. 2 to 3 hours.
Wow. A round of applause for that. A round of applause. Thank you very much. I've just been told that I can extend the session by 5 minutes because this is a master class, if you allow me, on the Chettiar way of doing business. So since you said that, please talk about your daily yoga practice because I know a lot of people would want to be inspired.
Isn't this business today? No, actually, I think, well, my journey into it actually started, the real culprit there is Kanika, who's there in the audience. She got me into it, so she's the one to blame. But no, I mean, I honestly think that it's a phenomenal technology, right? Because it's something that we've understood in the East, that basically we're hardware and software, and that we can totally rewire our software and make us just, much more effective and efficient human beings. So when you understand that there's a technology like that, I think it's a huge opportunity to use it, right? And so yoga, as it's interpreted again in the West, is all about asana for the physical body. But when we talk about it here, it's a combination of asana, pranayam, meditation. It's for the physical body, the mental body, the emotional body, the energy body. So it's such a comprehensive science. And honestly, it's a pure science and technology that once you understand it like that, yeah, you're just going to use it. I mean, it's a drug that's very difficult to get off of once you understand what it can do for you.
Absolutely. You nudged me back to business, so I have a few questions in the time that we have, the extended time. And the first one really, which is one or maybe more of your businesses where the market has so far underestimated its true potential, growth potential?
So if I were to look at it, when I take CG Power, right, and CG Power is actually based here in Mumbai. It's a business that we were originally attracted to because of motors and railways, but the thing that's now really where we're not leveraging its potential enough yet is in the power side, right? Actually, the name is CG Power, so I guess we should have got the hint. But basically, we make transformers and switchgear. But what's happening in the power sector globally and in India is actually just a massive opportunity. Why I say we're under leveraging it is because it's also undergoing a massive shift. But the biggest areas really are when you begin to look at renewables, when you look at what they're beginning to do, and when you begin to look at consumption on the data center side, EVs that Anish was talking about, all of that requires a lot more electricity. And the charging infrastructure that Anish was talking about, right, setting up across the country is going to require a lot of power. And that, I think, just offers huge opportunity for us to rethink. And honestly, India has the opportunity to rethink the way all three, generation, transmission, distribution of power is done. And therefore, that offers the country a huge opportunity in that sector.
Therefore, linking to what you just said, which sectors do you think will drive future growth, or let's say a medium to long term for the group?
So I would honestly say that there's a lot of opportunity, in a lot of the areas that we get into, right? So basically, financial services clearly, I think is a business that will continue to grow in the country, and I can see that, as long as India needs to grow, like financial services is something that the country will require for it to grow. So you can see a lot of long-term growth legs there. We've talked about, the power side and some of the newer areas. Clean mobility that, Anish talked about, I think is going to be a huge opportunity for growth. The fertilizer sector obviously is something that, again, the country needs a lot of. So I would actually say that it's a great portfolio. Insurance is something that's also kind of, there's a lot of opportunity in that sector as well. So across the business set, I think that there are a lot of businesses that, all have a lot of opportunity. I just think that India is still so nascent in its growth cycle that it just needs so much, right? And so that creates a lot of opportunity for businesses in the country today.
Mr. Subbiah, but is there a risk within your entire portfolio of import dependence. For example, on fertilizers, there's a big lesson that we are being taught, but there are no easy answers. It's not about flipping a switch. We are not blessed with certain natural resources. What can you do? Is import dependence a risk that is now right in front of you as a CEO?
So 100%, but I think, the Prime Minister is also very, very much on the bandwagon of how to correct for this, right? And I think that's a huge, it's something that the country has to do, right? Reduce its dependence on fossil fuels, reduce its dependence on a lot of things we import. But that's why all of these things are happening, right? I mean, like basically, if you look at it, though we assemble a lot of mobile phones in India, a lot of the components are still imported, right? Hence semiconductors, right? Hence all the electronics that needs to go because honestly, we are very, very far behind, and pretty much anything we do, any of these devices, including this one, probably has most of its components imported, right? The device itself may be imported, right?
To interrupt you, many years ago, I was shocked and dismayed to learn that even this plastic around this gun mic, as we call it in our industry, was completely imported. So, that's the kind of import dependence that we have had. But please continue your point, sir.
So absolutely. So I think that there's a huge focus on this now, and everybody is beginning to look at it in sectors that they know, right? So in the sectors that we know, we definitely see a lot of opportunity to do that. And semiconductors is one area where we're making a big play to reduce that import dependence. And I think it's really going to happen. It's going to happen sector after sector. But each sector takes responsibility for their own area and backward integrating so that they don't have less import dependence. And I think India will get itself there.
So at the group level, how do you make decisions on capital allocation? And if I may also add, from the past, what was that one lesson that you learned on capital allocation that perhaps went wrong, which you would tell younger CEOs, other CEOs as a lesson to remember?
So, capital allocations actually, I think, a very interesting area, right? And it's not an area that can get covered in a short period of time. It's actually interesting because it's a one thing they don't teach you in business school. I don't think they teach capital allocation at all anywhere, right? So it's not like there are very clear principles for it. It's not very clear as to how companies should actually go about it. So, I actually think a lot of good decisions, obviously there's this whole thing, right? First off, one thing that I hold that is very, very important to do in companies is that you need to separate out two engines, right? I talked about free cash flow earlier, but I believe that where companies make the biggest mistakes are by clubbing the free cash generation engine and the capital allocation engine together. So almost always the people that generate the free cash aren't necessarily the right people to be the best capital allocators. So it's almost like once they generate the free cash, you got to take it away from them and then say, okay, now where do I need to allocate it, right? And the allocation mindset is very, very different, right? Because generally, if you have a division that's generating free cash, they'll come up with ideas that can also use their free cash. But how do you determine whether that's the best place to put the free cash? So it's almost always better, and we have a separate group of people that just focus on where the cash should get allocated. And they're very different from the group of people that are focused on generating the cash.
My colleague Krishna Gopalan has a question for you. I'm going to request Krishna to step into the spotlight. And can we get a mic to Krishna?
Hi, good evening. It's something we did bring out for the interview as well, but we spoke about conservatism in terms of going about business. And you did mention this bit about how the South is viewed on that particular parameter. But I think for the audience here, that will be something to hear, Vellayan. If you can tell us how the conservative quotient has evolved over time in the South and what makes it different today.
Yeah, so, you're right, Krishna. I mean, the South has always been viewed as very conservative. But, I don't necessarily see that as kind of a net liability, right? I mean, because basically, you talked about earlier, right? There are ways that you could again, linking back to capital allocation, I would say that what you're seeing now is actually, a South that is actually willing to kind of focus a lot more on growth than it has in the past, right? It still might be conservative in the way it kind of allocates capital, but it's getting a lot more focused on growth. And if I look at it, right, we've always had a lot of engineering talent. I always joke that, kind of, if I come to Mumbai, I can get along better in Tamil here than I can get along in Chennai, because, you go to the leadership in almost most of the companies in Mumbai, and you'll find a South Indian in the top 3 or 4, right? I mean, we started with SNS, and SNS is here, so kind of, there's no shortage of, right? And that's true across, I mean, I guess you can name all of the leading groups here, and it's pretty easy to name the South Indians in the top 3 or 4. So it's not that, we've never had the skills to do it. It's just that we chose to kind of operate in a particular way. And I think that that's beginning to change a lot, right? And so we're seeing that, a lot of groups in the South, we're seeing TVS, folks like Sudarshan Venu. We're seeing so many people who are basically willing to take on, a new level, kind of a new desire to grow at a much faster pace than they've traditionally grown. And I think that that's actually going to be a huge opportunity, because, the South is very ripe, for a lot more industries to come in and kind of grow out of there. So I think that's going to be a lot of opportunity in the future.
I'm going to take the liberty of requesting Mr. Alagappan. Sir, one question that you would ask Mr. Subbiah here on stage that you haven't asked in person but can now do that.
This is, I keep saying the way he's kind of growing, and he's saying that, he's broken the conservatism in our group. So, it's interesting to find out from him how he's done it actually, because he's really broken the mold, and he's like really pushing us to do more now.
Honestly, I think obviously, thanks Arun, but, I think that the opportunity has always been there, right? And like I said, what the fourth generation allows us to do is that, because we start off, and we kind of, we actually have the opportunity to take a lot more, what you won't perceive as risk, but I actually don't kind of, like, if you look at our balance sheets, right, I don't think any company in the group, I would say right now, I don't think any company in the group has any net debt, except for Chola. Chola, obviously, kind of, given that we have to borrow a lot, it has a lot of debt. It probably makes up for all the other companies combined. But basically, if you can look at engines for growth whilst keeping your balance sheet strong, right? I think that, you definitely will find a lot of opportunities, right? And so the way we look at it is, if we set a metric for ourselves, right? And one of the metrics that we set for ourselves internally, whether we look at TI, CG or Chola, is saying how can we grow at about 26% a year? And why you like to set a very high threshold is because it pushes your ordinary thinking, right? So you can't say I'm going to grow at GDP, even twice GDP, because if you have to grow at 26%, you have to think of ways that are not going to, you're not going to get to by the natural way of growth. And then basically what we do is break it down, right? So we ask the existing businesses, existing divisions, on your own organic level, what rate can you grow at? And let's just say that that is 7 to 9%. Then what you've really got to start thinking of is, how do you generate that delta, the 17 to 18, 19%, with the free cash that you basically generate? And so separating that out and kind of beginning to think of growth differently from how the current business is run is one of the formulas that I think works well.
Mr. Subbiah, I want to follow up on the point of generational continuity. In many of the groups that I have covered, I have noticed that by the second generation or the third generation, that generation is invested in the business, but they primarily look at themselves and think of themselves as investors. They don't want to operate, they don't want to get their hands dirty, they don't want to be on the shop floor. What do you make of this? And if you could possibly share, what are your thoughts for your next generation, and how do you see them being in the diverse businesses? Are they going to be manager, operators, or just promoters and capital allocators?
So, so I think that's a great question, and very, very pertinent to family business in India. Like you asked earlier about the conglomerates, I think conglomerates in India exist. A lot of them have been family businesses, right? 76% of the traded stock exchange are family businesses, right? And like I said, family businesses have an inherent advantage, right? Because you have a reputation, you have so many things that going for you. So I think that for family businesses, it's very, very important to be an operator. Right? Investors are a different group, but I think that if this country needs, like 100 groups like the Tatas or the Ambanis, the Adanis, right? So basically, we have to think of it as the only way we can create those 100 groups is by having more people that operate, right? You cannot get there by basically being an investor. So I think it's really important that family businesses continue to be operators. And that's something that you have to create in the DNA of the business, in personal DNAs as well, right? As growing up, we never even thought it would be an option to be an investor, right? We knew that we had to get out there, go out to where the plants are, focus on what it kind of requires to be a strong operator in the country.
Absolutely, and we wish groups like yours, and like you said, hundreds of groups that a growing country and economy like India needs. Thank you very much for your time and for being such a great sport and sharing so many insights, including on yoga. I don't know how many of you, but 3 hours per day, I don't think many would probably be even doing 3 minutes per day. But Mr. Subbiah, all the very best, good health, and lots of business success and prosperity. Thank you very much for this wonderful masterclass with us today.
Thank you so much.
A huge round of applause, ladies and gentlemen. Thank you so much, sir. But stay tuned, and I will request Mr. Dinesh Bhatia, Group CEO of India Today, to please come up on stage to present a token of appreciation to Mr. Subbiah. Big hand, ladies and gentlemen.